This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 215 is brought to us by Bybit. It is time, traders, for the World Series of Trading, the largest trading competition in all of the world, hence the name. This is hosted by Bybit, and I know that if you're one of my students, I don't really teach you how to trade in a manner that would be conducive to winning a contest, but some of you do trade that way, and you can just go give it a shot, but you have to sign up through Bybit. And while you're doing that, you might as well join through my link. Go down below to the show notes and click on the link to the Bybit blog. At the bottom of that blog, you will find my sign-up link and unlock all the rewards it gives you throughout your time there. This place gives you everything, but you already knew that because with Bybit, as you know, membership has its rewards. It is the 10-Minute Contrarian Podcast, and let's go ahead and recap the last couple weeks because I feel like that's really important leading into this week. Last week, we should have done this episode, but we had a little bit of a run-up, and it turned out to be a bit of a fugazi run-up in base metals, but we had to talk about it to see if it did sustain, and it did not. Copper took a nosedive, drug a lot of other metals down with it, and some of you might still be getting a signal on your monthly chart, and if you are, you should probably follow it, but for some of us, it was much ado about nothing, and the episode before that was AI episode part 1. If you, for some reason, are joining us for this episode but did not catch part 1, you are going to want to pause and do that now, because it was a very critical episode. Here at the 10-Minute Contrarian Podcast, we like to deal with things which are inevitable, and then invest our money based on that, and make life decisions based on that. And investing is no good if you're not making any money to begin with, so please go listen to that episode. But for the majority of you, welcome to part 2. And the main section of that first AI episode that I want to kind of reiterate because it transitions us nicely into part 2 is that we now know most of the developed world, especially the United States and China, are going all in on AI. Whoever wins the AI war is going to have a leg up in intelligence, development, defense, all of it, really. And the United States does not want to concede that power, and China wants that power. And all other developed nations are not going to want to get left behind here. Some people are calling this the new internet. Some people are saying this is bigger than the internet. And I don't know about you, but I was too young and broke to invest in the internet at any stage, really. And if I could turn back the clock, I would have certainly done so, as would you have. But we didn't get to. But we do get to invest here. I saw a great saying on X where they said boomers had the opportunity to buy cheap homes, to where millennials and Gen Z got the opportunity to invest in cheap crypto and AI in the early stages. Now, even though it's a small generation, Gen Xers like me had the chance to invest early in both. What up? But I did not buy a house. But you understand what I'm saying. You have to take advantage of the once-in-a-lifetime opportunities which come your way. And this is what we will be talking about today. Now, if you're new, we invest a particular way here at the 10-Minute Contrarian Podcast, to where we don't do the obvious thing and just try to chase AI companies all day. If you do that, you are certainly going to get some right, and you will also get the majority of them wrong. And what does that equal out to? Who knows? What we like to do here is we like to up our odds of winning, yet still participate in all the asymmetry that's out there. My no-nonsense Forex traders understand just what a difference eliminating losses can make to your bottom line. And we carry over that same logic here. By maybe not directly investing in the AI companies themselves, but you can do a little bit of that if you want, but we're mainly investing in things that we know AI cannot live without. And bonus points if we can figure out the things which AI will make even scarcer than they currently are, because of the simple law of supply and demand. There are plenty of things out there, contrarians, which will go down in supply quite a bit, yet demand is going to be ravenous. So let's jump into this. I can already tell this is probably going to be a more long-form episode based on my notes. But the number one thing we need to really focus on, in my opinion, is the power that will be needed to run all of AI. And if it wasn't already obvious, the power needed to run AI is going to come almost solely in the form of electricity. Electricity is the new oil. It is cheaper and more efficient, and we just don't have the luxury anymore of using power which is more expensive and less efficient. There's a race going on. There's a real competition going on here. So cheap, efficient energy is where it's going to be at the very core, and then all of the components needed to turn that into electricity is going to be the second part of this. And if we can understand what this diagram is going to look like, then we know exactly where we need to be putting our money. Now, don't believe me, believe the one person who I follow, and I do pay for this service. I'm going to be really careful which parts I release and which ones I don't. But I've always thought Marin Katusa had his finger on the pulse of this more than anybody. And I'll read an excerpt from his paid newsletter, and he says this: electricity has become the new foundation of economic power. Think about that. Unlike oil, which powered the industrial economy of the 20th century, the 21st century economy is being shaped by compute, data, and AI, all of which depend on one thing: access to cheap, stable, and scalable electricity. And he goes on to point out that simply training a single LMM takes 1 entire gigawatt hour of electricity, which is enough to power 1,000 homes. And spoiler alert, we're going to need a lot more than 1 gigawatt hour of electricity. So just the AI itself is going to require that, not to mention the electricity needed for the data centers, the cloud systems, the satellites, the backup electricity. Remember, these things will need to be running uninterrupted. If we have the world running on AI, or parts of the world running on AI, and the power goes out and AI goes out, that's really, really going to be a problem. But more on that in a bit. What is the punchline to this whole thing? What are we going to need to invest in ourselves to take advantage of this out-of-nowhere boon in demand for electricity? Let's start with the metals. We say it all the time. It's all going to come down to copper. You cannot replace, you can replace copper with aluminum, but in something like this, you're going to want the most efficient output possible, because remember, this is a competition at the end of the day. If your competitors are using copper and you're using aluminum, you're going to have problems, believe me. So I think both metals will do well. But those of you who've been following this podcast, you know about the future supply issues copper is going to have. It's bad. We almost have no chance of making demand here. Before AI, I was saying this. Now you add this into the mix, this is really problematic. I'll sit around at tables with people talking about, all the things that AI is going to be able to do in the future, and then sometimes they get a little bit doomy and talk about some of the other things that of the problems that AI may cause. And I just come in and be like, look, guys, as a commodities investor, there are 2 metals we just simply don't have enough of for AI to be able to even do this. One of those is copper, and the other one is silver. Silver is an absolute must for almost every form of electricity. And if you talk about that little multiplier we brought up a few minutes ago, take whatever demand there was going to be for silver, and then I don't know if you can multiply it. I don't know how the numbers would even work. All I know is that in the last few years, this out-of-nowhere increased demand for silver has popped up. And you guys know, because I've been talking about it a lot. When it comes to copper and silver, I have been doing a lot to make sure that my chips are down for the next 5 to 10 years at least. I'm sure glad I got into silver when I did. And we spoke, I don't know how many episodes ago, talking about the silver juniors. There is still a lot of value there. There are companies like Hecla Silver, which is a large producer, which haven't even really broken out yet. So if you think you've missed the bus, or if you think you have missed the bus in terms of adding on to your current silver positions, you have not, but you probably need to act pretty soon, because your lack of action is what's gotten you into this position. Don't let it happen again. I'm telling you, you will really be happy that you locked down your silver and copper positions going forward. I am strong on silver. I am not as strong as I would like to be on copper. However, this past week, I don't know if you've been paying attention or if you're listening to this into the future, we had an absolute nosedive in the price of copper, about 20%, mainly due to China misreporting, which they always do anyway. I can't believe people keep buying into the numbers that China puts out, but they do, and this kind of works to our benefit. And when this happened, I had several people tell me that they are taking advantage of this opportunity, as should you, as will I. Now, there are two other metals here I want to touch on that are also going to see increased demand, especially. Well, really three. One is going to be steel. Steel, as we said last week, is already doing pretty well, but we're going to need a lot more of it to create these data centers. I mean, did you see the one that Mark Zuckerberg was building? It's going to have its own zip code. It's gigantic, and you need steel to build it, apart from a lot of the electrical infrastructure we're going to need. It's one of those things people don't really think of, but that's exactly what we like to talk about here on the 10-Minute Contrarian podcast. We like to look where others aren't looking, yet still invest in things that this new technology and this new turn in the way things are going to be done is going to desperately need. I love under-the-radar things like this. Keep a very close eye on steel. It's one of those things we have not talked about on this show very much. And I know a lot of you, the more diligent of you, have already gotten your watch list set up for things like gold, silver, copper, energy, things like that. I would start adding steel companies to your watch list as well, because we know they will play a part. And then the other thing I wanted to mention is something we just talked about a few minutes ago. You absolutely cannot afford to have intermittent power here. Power must be going on constantly, which means you will need backups in case there is an electrical failure or the power grid goes down, and those backups come from batteries. And if you want to get in on a couple of battery metals that are almost damn near bottoming out right now, there are two in particular that are almost always going to be needed for batteries, and that is going to be lithium, which we did an entire episode on, which I cannot wait to pull the trigger on. I just haven't gotten the green light yet. And cobalt is going to be another one. Cobalt absolutely tanked during the ESG nonsense because of how it's mined, and how it's mined is absolutely tragic. So if it's a morality thing, I understand you not wanting to invest in cobalt. But this AI revolution is not going to care. They need their batteries. And as much as we have tried to re-engineer batteries to become, I guess, cleaner and greener and more efficient, we just end up coming back to cobalt. I really think cobalt is going to have a resurgence here. So with steel, look, all of these things could end up doing really well. With copper and copper companies, you're going to have to invest somewhere in the middle. Steel, you might be investing somewhere near all-time highs or pretty close to it. But again, that's not going to matter. It only depends on what it does in the future. But for some of you who insist on only buying bargain basement stocks, lithium and cobalt are going to certainly be for you. I always say I like buying things when they're really cheap, and I do. But when it comes to things which I find to be inevitable, I really don't care where I buy them. I just want to make sure I get a piece. I just bought more Bitcoin at what looks to maybe be a short-term, maybe even a mid-term top, but I don't care. I just wanted more, and I'm very happy that I nutted up and bought more because I feel like Bitcoin is an inevitability. Moral of the story, use your monthly charts where you can, but at the end of the day, just make sure you're participating in the metals, which all of this electricity is going to desperately need. Do not let the opportunity to invest in what could be the next internet, or maybe even more significant than that, pass you by because you're looking for the absolute perfect entry. Make sure you have something in front of you. And then after that, you can start trying to put a finer point on things. I just don't want any of you to miss out on this. But I really do think the metals are the way to get there. Now let's talk about other ways to get there. We said before, to power this, you need cheap, fast, reliable energy. Where are the two best places to get that right now and probably into the future. One is going to be natural gas. It fits all of those three descriptors. And uranium. China did a great job of getting way ahead of this, and they have built nuclear reactors, large and then small, which we're going to talk about the small ones in a moment, all over their country. Now, a handful of those are already in use. The majority of them will be in use soon, and they are going to need copious amounts of uranium. And if you guys have been studying this market and or listening to this podcast for any amount of time, you know that the supply currently is fine, but once you start needing more of it, there's going to be problems. There's only a very tiny amount of companies out there that actually produce this stuff. And those companies have had real issues in the past. So you can logically assume that they will also be having problems in the future, especially when demand gets just out of control. Because again, it's not just China doing this. UAE has put up a lot of reactors. Russia has too. The United States is finally, I think, going to catch up to this. And technology has advanced to the point to where you don't have those like Homer Simpson nuclear reactors out there as much anymore. You still have them. But the superior way to go about this in 2025 and beyond is something called SMRs, small modular reactors. Reactors which put out the same output as the large ones do, yet are smaller, cheaper, and far more efficient and flexible than the large ones are. And if you had the opportunity to either build a large one or a small one, you're going to pick the small one, and there is an opportunity here. Now, unfortunately, again, this is where people like Marin Katusa really shine, and I'm not going to divulge what he said in his past newsletters about this, but he's all over it. So I can't give you the details, but I can give you the thing you need to be looking closely at. And hopefully you will be able to do your research from there. And especially with the AI models we have currently, I don't think this should be very hard to do. So I don't feel like I'm shortchanging you any by not being a dick and releasing paid information out to everybody for free. But I think there's opportunity to win and win really big in the SMR sector going forward. Contrarians, I really feel like this is such a pivotal episode of this podcast because this is kind of laying out where you should be putting your money for the next 5 to 10 years. Because all of these things we're talking about go far beyond just AI. We're going to need everything I'm talking about for other things as well. There's not one thing I am talking about today which will only be used for AI. Everything we're talking about today is going to power the future. So please be taking notes and please be paying very close attention to what I'm telling you right now. I missed out on investing in the internet. I was too young. I missed out on investing in tech stocks. I was too broke. And I will be damned if I miss out on this. Now, while I'm on this whole Marin Katusa thing, let's go a little further here. We spoke a little bit about data centers. That's a lot of people talking about data centers right now because they weren't before. We have the one that the Mark Zuckerberg is building. He understands the technology coming, and he understands that even if he is a little bit early here, like he was with the metaverse, that you're still going to need the data center, no matter what. You can do so many things with it. And now we spoke earlier about all the components a data center is going to need. A very underground thing here, and again, this goes into that paid territory. I can tell you what it is, but I can't tell you exactly where to look. Is the utility companies which will be powering these data centers, not only now, but into the future. These things should absolutely boom. And I can tell you, I can give you a starting point. There is a company that is quite well known. It's a stock that only has one letter, and that letter is D, Dominion Energy. Kind of the lost link in this whole diagram is the companies which connect the electricity to the data centers themselves. Again, I love this. This is an essential piece of the overall diagram. We know we're going to need it. We know how important it is, but it's a place where so few people are looking. But this is really all I can say. So take the information I just gave you, and go run with it. Yeah, that's really what I do here. I'm not a signal service. Never have been. I always said I'm going to be very transparent with my crypto buys and sells, and I've held to that. But you all know what this is. This is, I say it, if you look at the description of this podcast, we are your gateway drug. I tell you where to go look, and you take it from there. It has always been this way. Now, I think most of you know that. Some of you may not. Some of you may be new. I just don't want anybody to think I'm purposely holding out on you. We're all adults. You have great research materials at your fingertips, especially now with AI. You have your monthly charts. You have me pointing you in a direction, and that is a combination that nobody else in this world has. So for the love of God, use it. All right, but we're not done. We're actually breezing through this here. Really one other place here, which some of you might be jumping up and down screaming, why have you not mentioned this particular sector yet? Well, I'm about to. There is going to be, not just with AI, but for everything in the future, in my opinion, an endless demand for chips. Now, all you super discount shoppers are not going to love this, but that doesn't make it untrue. Investing in semiconductors, any chance you get, is still probably going to pay off really big down the road. A very cheap and easy place to look here is going to be the ETF, ticker symbol SOXX, the number one best producing ETF of the 2020s. But this ETF does have dips, which means this ETF in particular will give you long signals on your monthly chart. And what you choose to do with those signals is up to you. But you can certainly go deeper into this space, and it may serve you well to do so. Because there has been almost a world war going on with these semiconductors between the United States and China and all of the other countries which make the components that go into these chips. There's probably a network of 50 plus countries which do different levels of fabrication just for one chip. And this is a very delicate and tenuous process, which has been going on, at least in the States, all the way through Trump's first administration, into the Biden administration, into now. And believe me, this war is not going to stop. It simply can't. Because as soon as somebody wins this war, they've pretty much won the whole thing. And semiconductor companies throughout have done nothing but benefit tremendously from this back and forth. And there's no reason to reasonably assume that this is ever going to change. So to wrap this up, I think if you just took the sectors I gave you, and in terms of stock and ETF investing, just focus on those, you're going to have a pretty good time. And if we do see a recession, two things. I think one, you'll be fairly insulated with these stocks compared to others in other sectors. And if anything, we talk about it all the time, it's just going to give you an even better buying opportunity to add on to your positions or discover new ones at cheaper prices. If you invest in inevitabilities, heads you win, tails you win more. And while most people out there who do invest are just going to be chasing these AI companies and trying to play that lottery, that is not what we do here. There is a reason why we have done so well on this show. But we don't invest in the companies so much because you're going to take a lot of losses that way. We find out what those companies are going to desperately need and simply cannot live without. And we put our money there. Similar upside, but fairly limited downside. And certainly a lot less losses. Those of you who've been following me since the beginning, you know the very few losses we do take on here is when we start to go a bit off the reservation and start going into more niched, very high upside plays, which have a much higher fail rate. And obviously, sometimes we fail. Or maybe we don't necessarily fail, but we're just way too early. But when we stick to our guns, when we stick to our core, like we're doing here, it's been pretty magical so far. But I don't see why it's a surprise to anybody. It all seems pretty obvious to me. It's just for some reason it's not obvious to everybody else. Hey, but that's fine. We will continue to take advantage of this dichotomy over and over again as much as we possibly can. Because just looking simply one level deeper and investing in all of the components AI is going to desperately need may seem crazy to some investors. I don't get it. It shouldn't be crazy, because it's not crazy. It's just us being logical, and more importantly, it's just us being early.